I talk about how on big down days or large range days, big ranges beget small ranges, and small ranges beget large ranges. I learned that from Larry Williams, and I think it's a truism. It's going to never fall out of style. It's real. When there's a lot of excitement, when there's interest in a market, that's when everybody else feels comfortable going in. Low resistance liquidity run. The idea of looking for trades that are one-sided, where it's easy. You don't have to put a whole lot of thought into it, but waiting for those types of setups. Those are, in my opinion, what traders should be striving to trade and hunt, not looking for just any old pattern. You know, you're all learning my fair value gap. Not every little gap constitutes a low resistance liquidity run entry. When I'm teaching people to look at the marketplace, it's easy for someone to be critical and say, okay, look at this, you know, this fair value gap didn't work there. Oh, this didn't work there. This didn't work there. If you're going to look at what I'm teaching or investigate what it is I'm looking for, don't go in with the mindset saying, let's see how this fails. I want you to go in looking at how I teach you how to find it, because the critics, they avoid all that. They're not going to go through the process of doing it the right way as I outline it. And then you'll see that they exist. They're there in the move every single day, every single week. They repeat all the time. If you go in looking for moves that's just because you think it's a fair value gap, that's going to frustrate you, because it's not going to give you moves like yesterday. There may be fair value gaps there, okay, by what is defined as the pattern. But that pattern is not associated with the expected delivery of price for that given day. So what do I mean by that? As I outlined on Thursday, it was a large range day, and we're near the end of the range on that daily run that was lower from April high to May 12th. So we're, by definition, without the use of an indicator, we're oversold. We don't need an indicator to plot the fact that we're oversold. So the market's really, really, really suppressed, pulled down low. It's at a real deep discount. And we're at the end of the week, and we stopped short on S&P and the NASDAQ before running out May 12th's low. But the Dow was able to go through May 12th's low. So all of those ingredients come together and create this product called consolidation. And those days, if you don't know what you're looking for, when to anticipate them, how to read them, you can go in and trick yourself into thinking there's a pattern there. There's a pattern in anything. You can be fooled by randomness. But when you apply logic and the narrative that would be associated with a low resistance liquidity run, that means it's a high probability one-sided price move that is justifiable only on the side that you're trying to trade. In the beginning, when you're learning, it's not going to feel clear to you as to what that means. And that's why I tell everyone, you have to take your time. You're going to get these moments of astonishment where it's like, I finally got that. It's an epiphany where you discover what you didn't realize was important to you. Now suddenly things become a lot more clear. And that is the byproduct of going through back testing, looking through old data and studying it. You immediately go to the toxic excuse as to why it's not working for you. When the whole concept and the point was, go into the marketplace, study, what is it doing? How is this going to benefit me? Or more importantly, how could I be harmed by this? Because if these environments repeat, they do. If you know what they look like going in, or once you get involved and you can identify what it is in terms of a market profile day where it's likely to consolidate and chop you up, how do you engage with that? How do you trade it? Well, I gave you insights yesterday on how to do that. Stop trading off until all throughout the afternoon, wait till that last hour trading. and look for a pattern that makes sense. Run my buy stops and pull back to the middle of the range. Talking about making money and not really emphasizing the underlying risk associated to doing this is irresponsible. And I want you to understand where you're going to lose. I'm telling you, you're going to lose, but I want you to know that it's assuring to know where these pitfalls are likely to materialize. Some people are not going to want to find value in that, like yesterday's entire drawn out discussion throughout the day. That is a day that will absolutely lead you down. When you have a one-sided market gearing where a low resistance liquidity run for like a run to old high or old low, which is what I'm kind of really trying to teach my store, it'll have a very clear pattern and expectation at the opening price, or not the opening price, at the opening at 9:30. You'll get this flurry of price action. Like if we were bearish, the ideal scenario in my mind would have been run up, take out the 39.50 level, and then break down, then come back in for a fair value gap, and then run for 39.15 and a quarter. Yeah. We want to see one-sidedness when we're looking at the marketplace. And if you don't have clear one-sidedness, and then if you're expecting bearish prices, the obvious would be the market rallies above the opening price, runs to either an old high or rebounds to a fair value gap, then breaks down and goes to a low resistance liquidity run for sell side liquidity below old low. That is, to me, what all of you should be hunting for. That's your unicorn. Okay. They exist. They're in the marketplace, but they don't form every single trading session every single day. You'll have a handful of those over the course of a week. But apart from that, you can do tiny little scalps. They may not have the same level of probability behind them, but if you're getting 1 for 1 and you know what you're doing, you're not over leveraging yourself, you can grow an account with 1 to 1. You don't need 5 to 1, 50 to 1, 200 to 1 like these guys on Instagram and Telegram rooms. Yeah, I'm doing. If you ever done the math on these guys, they're olds, okay, but they're claiming they got 500 to 1 trades. Why aren't they billionaires? Like seriously, why? If you can do that, why are you trading with 1 micro lot with your MT4 screenshots? Like it's been 6 months. You should be at least above a standard lot now. The things that people believe and swallow just because they see 1 screenshot of something is ridiculous. And all I try to do is be a voice of reason. Okay. I could do a lot of those things for real that they're pretending to afford, but it does nothing to make you a better trader. Thinking about things responsibly, respecting the level of risk, and doing things that are boring. Trading is boring. You want it to be boring. Your job sucks, right? Everybody hates their job. You're there. You have to put in the time. It's boring. You'd rather be doing something else. Trading is like that too. People say, oh, I love trading. No, you don't. You don't love trading. You love trading when it's profitable. Okay, let's be real. You don't like trading. You don't love trading. You love winning. Okay, but everybody wants to love trading. I eat, sleep, breathe trading. Yeah, I do those things and I hate it. Like I hate it. I love back testing. I love studying price action. I love that. I hate trading. Why do I hate trading? Because every single one of these candles that form, I'm expecting it to do what I want it to do. Think about that now. I'm being 100% honest with you. I want every single one of these candles to do exactly what I want them to do. And that is an internal struggle for me because I have mentioned many times I'm obsessively compulsive. So I want things my way. I am an absolute control freak on every aspect of my, and when I look at these candlesticks, it's an internal arm wrestling match when they don't bend to my will. So in my approach to learning how to beat these markets, I had to align myself with how they book. And I was blessed and fortunate to end up in the situations that I was in, that I was able to learn what these things do. There are times when I don't know what they're doing. And it was a hard process for me to learn when that is.